Good evening, madam. My name is Aniha Chikko. Me and my group members today will be reviewing on an article titled Islamic Portfolio Insurance for Market Risk Management, a comprehensive analysis of traditional and Islamic portfolios on the Malaysian Stock Exchange. So to begin with the presentation, I will be presenting about the problems or the issues based on the article. Let me begin. Based on the article, the main problem is that Islamic investors face challenges in managing market risk because many conventional financial instruments such as futures and also options are not allowed under Sharia law. This creates a limitation for Islamic investors who wants to protect their portfolio from market fluctuations. In addition, Islamic finance is growing rapidly because in Malaysia, many investors prefer to follow Sharia principles, especially in Malaysia, which prohibit interest, uncertainty, and also gambling. However, without proper risk management tools, Islamic investor may be exposed to higher risk compared to conventional investors. Therefore, this is need to uh, develop a effective and also Sharia compliant portfolio insurance strategies to help with to manage the market risk. Thank you. Moving on, I will be presenting about literature review on this article. The literature review in this article actually discusses the previous studies related to Islamic finance, risk management, and also portfolio insurance strategy. The author actually mainly refers to existing research on how conventional portfolio insurance techniques such as CPPI and also OBPI are used in traditional financial market to manage the risk and also to protect portfolio at the same time. These studies provides the theoretical foundations for understanding how portfolio insurance work in general. Other than that, the literature also highlights the research on how Islamic finance principles, especially the restriction under Sharia law, where instruments such as derivatives are not allowed. This creates the need for alternative approaches that are compliant with Islamic principles, but also at the same time still effective in managing risk. The review also explains that while portfolio insurance strategy are well studied in conventional finance, there are also limited studies that apply or maybe at the same time compare the strategy within Islamic finance context, especially using the real market data, which clearly shows the research gap in existing literature. But however, overall, the literature review is balanced as it includes both traditional financial theories and also Islamic finance perspective. And it also supports the need for the study, which aims to fill the gap comparing the conventional portfolio insurance and also Islamic strategies using the data from Malaysian market stock. Thank you. That's all from me. I will be passing to the next presenter. Thank you.
Assalamualaikum, my name is Aina Dira Ahindra. I will continue presenting the design and procedures of this article. The article used a quantitative research method that focused on numerical data such as portfolio returns, risk levels, and overall performance. The method is suitable in order for the researchers to compare different investment strategies. This study is an original research and not a replica. The researchers developed and tested both Islamic and conventional portfolio insurance strategies using real data from the Malaysian stock market. In terms of measurement tools, the study used stock price data, portfolio returns, and risk analysis. It also applies two main strategies, which are CPPI and OBPI, to evaluate performance. I'll continue with the next point, which is research procedures. The procedures of the study are well organized. First, the researchers collected stock market data over a specific period. Then they classify stock into high, moderate, and low risk categories. After that, they constructed both Islamic and conventional portfolios. Next, they applied CPPI and OBPI strategies to this portfolio. Finally, they compare the result based on returns and risk management. As for the variables, the independent variables are the CPPI and OBPI strategies. Meanwhile, the dependent variables include portfolio returns, risk levels, and overall performance. And as for variables, the study also includes control variables such as market conditions and risk categories. The second last point is the sampling was done by selecting stocks from the Malaysian Stock Exchange over several years, which helps improve the reliability of the result. Lastly, there was no pilot study conducted as the researchers directly used the historical market data. Overall, the research design is clear, systematic, and suitable for achieving the study's objective. That's all from me. Thank you.
Hi, my name is Nur Aina Shira. I will start with data analysis and presentation and also continue with conclusion and implications. This slide is the most important, which is the findings of the study. The data used is quantitative and analyzed using numerical methods. The researchers compared portfolio performance based on returns and risk levels under different strategies. The findings strongly support the purpose of the study. First, Islamic portfolio insurance strategies are effective in managing market risk. This shows that even without using prohibited instruments, Islamic finance can still provide good risk management. Second, the study finds that the CPPI strategy performs better than the OBPI strategy in most situations. This is because CPPI is more flexible as it adjusts the investment between risky and safe assets based on market conditions. Third, Islamic portfolios can perform equally well or sometimes even better than conventional portfolios. This is very important finding because it shows that Islamic finance is competitive with conventional finance. However, the study also has some limitations. It only focuses on the Malaysian stock market and a specific time period. Therefore, the results may not be fully generalized to other countries or different market conditions. Overall, the findings are clear, relevant, and strongly support the study's objectives. Next. And now, I will continue with the conclusion and implications. The conclusion is clearly related to the purpose of the study. The research confirms that Islamic portfolio insurance strategies can effectively manage market risk while remaining compliant with Sharia principles. It also concludes that the CPPI strategy performs better than OBPI for both Islamic and conventional portfolios. The implications of these studies are very important for investors, especially Islamic investors. It provides a way to manage risk without violating religious principles. For financial institutions, it creates an opportunity to develop new Sharia-compliant financial products based on portfolio insurance strategies. For policymakers, it highlights the importance of supporting Islamic financial instruments to promote market stability and growth. The result affects several groups, including investors, portfolio managers, financial institutions, and also regulators. The study also provides recommendations for future research. It suggests testing Islamic portfolio insurance strategies in other countries and markets, as well as using different types of assets such as real estate or commodities. In conclusion, this study shows that Islamic finance is not only compliant with religious principles, but also practical and competitive in real financial markets. And that's all from me. Thank you.